show you guys, but I don't have anything specifically that would give us the perfect story that I wanted to really discuss with you here, but it is what it is. It is what it is. But you see a big string of basically zeros. You see this huge big string of zeros appearing on your footprint chart, and obviously when you see those zeros, you think to yourself, what the hell happened? So, you know, when you're looking at stops, in this area here, for example, let's assume there was a previous level in here. Well, what happens in this phase here? A lot of the times what will happen is you'll get, as far as sell orders, sell market orders, you'll get 0. And if you're looking at buy market orders, you'll maybe get 25. And then as the price goes up a tick, you'll get sell market orders again of 0, right? You'll get another sell market order of 0. And you'll get another buy market order of something else, right? And it'll go through this whole phase of simply big buy deltas coming in, pressing the price up into the top edges of this block. And then something happens. Either they stop, it runs out of steam, runs out of energy, or we get a big block lean that comes into the top edge. We start seeing buyers getting jammed, the stops getting jammed by something like ICE orders in this area here. And obviously, if that's what happens, that's going to be a very, very obvious reversal. Well, that's an imbalance, isn't it? That's a very, very strong-sided imbalance in that area. Yeah, very strong imbalance inside that area. So when I see that happening, whatever software you're using to show you an imbalance, that can be set to show you the stops. So when we use David's package, I don't know if Greg's got a stop package or a stop indicator and an imbalance indicator inside his package, but this is something that you can see just by looking at the footprint. So this is exactly what happened in here. The pink there is a stop run. And obviously that stop run, or what we would rather call it, an imbalance, takes place. It's not the fact that the imbalance took place. Imbalances take place all the time. It's the fact that it got iced up immediately in that same area, allowing me to buy against that and take the market right off that price. And you can see we've just went from 116s to 32s. It's a 16-point move. It's $800 profit on the S&P. It's a big winning trade. It's a big winning trade. So you can start to spot these types of ideas. Into the top edge here, you can see there's another stop run potentially there, or an imbalance. Now, we don't get any ICE orders there, but we start to recognize that the buyers start getting jammed on the very next candle there. So that could be a scalp sell trade. It's not the same. It's obviously just buyers getting jammed, but that scalp sell trade has just went from 32 to 27s. It's another 5-point move for anybody that spotted the stop run, the jam, and the reversal taking place, yeah? Now, the ICE is a better way to see it rather than simply just book liquidity, because they may well have pulled the liquidity just to get that final test into that higher price. And that's something that we can pay close attention to, is to see whether that happens. Now, obviously, you've seen that sell that I've just been discussing there in real time, that sell has actually sold off from that level. You can see it just here. So there's the liquidity there. There's the imbalance. There's the stop run. There's the jam, and there's your opportunity to start working your short trade against that level. And you can see what's happened since then. The price has sold away from it, and it's made some pretty easy cash from that higher price. Now, this is a 1,000 volume chart. You can obviously have a little bit more trouble seeing it on a 1-minute chart. Why? Well, you have more difficulty seeing it on a 1-minute chart because it gets gobbled up by the subsequent price action. So when it gets gobbled up by the subsequent price action, the stop run doesn't stand out. It just gets traded over, so it doesn't look like an imbalance anymore. As soon as a buyer comes in back against that stop, it's not going to look like an imbalance. So that is going to disappear off your charts, and you're never going to know that it was there. So obviously a volume chart does a little bit better job than this, and a range chart does a good job with this as well. So when we see imbalances creeping into the likes of oil, you can see, for example, coming off the top edge here, you can see that there are imbalances all the way through that phase there. So you can see there's a lot of imbalances coming off this range chart on oil, and you can see that shows up in the bottom of this chart, where you see an imbalance at 0.3, 0.6, 11, you see the speed starting to quicken up during that phase. And obviously the price moves into these and out of these imbalances. Now here's a good example of a possible reversal trade here. Do you see a possible reversal trade here? Well, yes, because there's an imbalance, buy imbalance, and it goes straight into a block trade. So if there's a buy imbalance and it goes straight into a block trade, that's exactly the trade I was talking about on the short of the S&P, wasn't it? So there's your opportunity to work a short trade in there. You wait for the book to turn around, preferably. The book turns around here, and you start saying to yourself, right, it's time for me to start working shorts. There's your short trade. And you get a nice little sell away from that price level. And obviously that level becomes quite useful going forward. It's potentially a reversal location. And you can see that we get one test in a failed auction. We get another opportunity here, but you can see that that jam never drops, no trade. The book never goes bearish, no trade. The price goes up. So we can't just take one piece. We've got to add it together. We've got to add this information together to make a case for the short trade. Make sense? Now, it sometimes happens that you'll get an imbalance coming away from a level, and that's something else that you sometimes want to pay attention to, because that is a momentum shifter. I'll show you what happened on gold just there to show you that momentum shift so that you can see what it looks like and recognize it going forward. So there's the momentum shift here. Do you see it? So we seem to have a buy-side imbalance here, and then it got jammed at the top edge. But it wasn't that caught my attention. What caught my attention was the imbalance here. So now you're thinking to yourself, well, they've jammed the buyer, and they've withdrawn liquidity below the market. So that's not a stop run, is it really, when you think about it? It's not really technically what you'd think of as a stop run, because it's at a top edge. But that's a great example of a trade that you want to be looking at as a possible short play away from that level. And you can see, obviously, you've got this cracking sell-off from that price. We went 65s to a low price of 57s almost immediately. And that's an $800 profit on that bit of order flow right there, which is obviously very, 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 very good. As you would imagine, very, very good indeed. So yeah, it is something that you can spot. It is something you can recognize as it's forming. You can see, for example, that these guys jammed up here, and then we got an imbalance creeping in here. Well, that means that that's a very high probability top line now, isn't it? That's a very high probability top line. So when the price goes up into the top line, are you selling it? No. You're waiting for some selling to come in. You're waiting for the book to start selling. The book starts selling here. We start seeing some selling coming in behind the book as well here, and you start saying, right, now is the time for me to get short. Now is the time for me to get short at that stage. And then the sell-off from that trade was beautiful. Absolutely beautiful.